What's up, guys? Today we're going to look at Credo Technology Group's earnings, and we're going to see why this stock is up 11%. And it's because they had a really great earnings report. So, first things first, what they do is they provide advanced high speed connectivity solutions that deliver optimized performance, reliability, energy efficiency, and security for the next generation of AI driven applications, cloud computing, and hyperscale networks. This company had a really good earnings report, and we'll take a look at the highlights of this real quick. The revenue was $170 million, which grew by 25.9% quarter over quarter and 179.7% year over year growth in revenue. That is absolutely phenomenal. You had a GAAP gross margin of 67.2% and a GAAP net income of $36.6 million. This company grew their revenue by a staggering amount. In the previous quarter, they posted revenue of $135 million. And this quarter, May 3rd, 2025, they posted $170 million in revenue, which was a huge increase. Another part that I really love about this is their total cost of revenue only went up by about $6 million, which is absolutely incredible that you've grown your overall revenue by $35 million and you only increased total cost of revenue by about $6 million. And you can see here, I've highlighted this down here, the total cost of revenue. That is insanely impressive for this company to do that. Now, granted, this company does not have a huge history of profitability, and we're going to take a look at that in a moment, but this revenue growth is staggering. And I think this definitely has to do with the relative boom going on in cloud computing and in the overall AI industry, just taking a huge leap forward. If we take a look at net income was pretty good this quarter. They had $29.3 million in net income for February of 2025. I'll just make sure you can see that date there. And for this quarter, they had 36.5 or almost $36.6 million in overall net income, which is a very nice increase. You can see that of April 27, 2024, last year, this company was $10.5 million in the negative on net income. And this company is now turning profitable, which is pretty nice to see. Overall diluted earnings per share, you see 20 cents earnings per share down here, and previous quarter it was 16 cents earnings per share. Last year it was minus 6 cents earnings per share. So this company is growing their revenue very quickly, and they're also becoming more profitable, which I think is very impressive. But I think what's even more impressive is the overall balance sheet of this company. This balance sheet is looking great. They have overall cash and cash equivalents of $236 million according of May 3rd, 2025. Last year, April 27th, 2024, this company had about $67 million in cash. So they grew their cash nearly $150 million. And they've grown their overall assets. Total assets increased by about $200 million year over year. That's from April 27, 2024. Now, what's really, really impressive about all of this is their accounts payable right now is only $56 million. Their total liabilities overall is $127 million. This company, with the cash they currently have on hand, could actually pay off all of their total liabilities, which I think is extremely impressive. This company looks pretty healthy and they're growing revenue very quickly. I would say overall, this company looks very strong. However, we're going to take a look at the guidance real quick and then the valuation more importantly. So for fiscal year 2026 financial outlook, they're expecting revenue between 185 and 195 million, which is a pretty nice increase still from 170 million, which they had this previous quarter. They're still looking at GAAP gross margin of 63.4% and 65.4%, and overall operating expenses around 90 million possibly. So overall, this is looking still really good for this company. They're still expecting to grow their revenue, but more importantly, let's take a look at this valuation. This is some room for concern here. You're looking at forward PE right now of 224.7 according to Seeking Alpha. Not exactly the valuation you're looking for. However, you do need to consider the growth that this company is exhibiting. It could very quickly grow into these PEs. Now, I don't know. Like, again, you can't really pay attention to current PE because this company is just now becoming profitable. You have to consider that. But that forward PE is still pretty high relative to the stock price. What the analysts are saying is that 12 analysts are rating this a 92% buy, 8% hold, and 0% are saying sell. You're looking at a median sales forecast of $70 per share, which I believe we just hit today almost. And after hours trading, it's now up 11.3%, and it's pretty close to $70 per share. However, that may need to get adjusted because this earnings for this quarter was absolutely phenomenal. and maybe the analysts are not really pricing in the growth that this company is going to have. Let me know if your comments if you think that this company is worth the buy. I think that we address its company has huge growth potential, is growing very fast. However, there is valuation concern, but it's not uncommon to see companies like this growing at this rate grow into those PEs very quickly. So let me know what your thoughts are. And if you got value from this video, please consider subscribing. Y'all have a good one.